If you're behind on your taxes, you may feel overwhelmed. Whether it's due to unpaid taxes or life getting in the way, filing back taxes is important to get back on track with the IRS. Catching up will not only protect benefits like Social Security, but it will also help you avoid additional penalties. Let's walk you through the process of filing back taxes and what happens if you don't. Back taxes refer to any tax liability that remains unpaid after the filing due date. These unpaid amounts often arise when individuals fail to file their federal income tax returns or fail to pay the full amount owed on time. Missing the deadline has several consequences. The IRS imposes interest on unpaid balances, which accrues daily, and penalties, such as the failure to file and failure to pay penalties, which can significantly increase the total amount owed. Over time, unresolved back taxes can lead to more serious actions, such as liens, levies, or wage garnishments. Failure to file prior year returns, whether it's a simple oversight or a more complex tax situation, can create a snowball effect that makes it harder to resolve your tax obligations. Filing back taxes can be daunting, but breaking it down into steps makes the process manageable. From catching up on missed federal income tax returns to claiming overlooked tax credits, the key is to address your past obligations promptly. By gathering essential documents such as Social Security information, as well as completing and filing accurate returns, this process ensures compliance. The first step in filing back taxes is to determine which returns you need to file. Start by identifying all past due returns, including individual income tax returns and previous year returns. Generally, the IRS requires you to file for the last 6 years to bring your account into compliance, but this may vary depending on your tax situation. For late returns tied to specific tax years, verify all prior income, deductions, and business expenses to ensure accurate reporting. Filing promptly can help resolve your back taxes and avoid additional penalties. To successfully prepare your back tax returns, gather all the documents you need. Start with the tax forms relevant to each year you're filing, such as W-2 forms from employers and 1099s for any freelance or contract work. These forms detail your income and withholdings and provide the basis for accurate reporting. Next, make sure you have wage statements and any additional documentation of income, like interest statements or business earnings. These records help ensure that all taxable income is reported, preventing further problems with the IRS. If some documents are missing, don't worry. Request IRS transcripts by filing Form 4506T. These tax transcripts summarize your tax records for specific years, including reported income, payments, and withholdings, so you can fill in any gaps. Taking the time to gather and organize all relevant tax records will make completing your overdue returns much more manageable and accurate. Once you've gathered all your documents, complete delinquent returns for each tax year you missed using the appropriate IRS forms for that year. For individual taxpayers, this is usually Form 1040. Use information from your documents, such as wage statements and IRS transcripts, to accurately report taxable income, deductions, and credits. If the IRS has already prepared a substitute return for you, an estimate based on the information they have, your role is to complete your own return to ensure that all deductions, credits, and accurate income are included. Filing your own return is especially important because the IRS's substitute return will likely overestimate your tax liability. Compare your completed return to the IRS transcripts. This will ensure that all income, withholdings, and estimated tax payments match what the IRS has on record, reducing the likelihood of discrepancies. Finally, submit the return to the appropriate IRS unit. Each IRS processing center handles returns based on factors like your location or the type of filing. Follow the instructions for mailing or electronic submission to ensure your delinquent returns are processed correctly. After filing, it's important to actively monitor the processing of your return and other compliance activities to ensure that everything is proceeding smoothly. First, contact the IRS to confirm that your return has been received and processed. You can do this by checking your account online at the IRS website or by calling their customer service line. It's also helpful to check for any actions the IRS may have taken before you filed, such as issuing a substitute return or opening an investigation into unfiled returns. Next, review your records, including any digital payment processor records, to make sure all payments and transactions are accounted for. This is key to reconciling your tax liability with your payment history. Finally, monitor compliance activities, such as collection notices or liens, that may arise as the IRS reviews your account. Proactive follow-up helps you address potential issues and meet your obligations. If you're facing tax penalties, consider requesting a penalty abatement or waiver from the IRS. The IRS will consider waiving penalties under two primary circumstances. The first is if it's your first offense, for which the IRS offers first-time penalty abatement. To be considered, you must have a clean compliance history, have filed all required returns or extensions for the past 3 years, and have paid any outstanding balances. This program is designed to encourage taxpayers to remain compliant in the future and provides a significant relief option for those who meet the criteria. The second is financial hardship, where you can demonstrate that paying the penalties would cause significant financial hardship. To apply for a penalty abatement, you'll need to contact the IRS directly or write a formal letter explaining your situation. If the hardship is severe, you may also consider filing Form 1127, Application for Extension of Time for Payment of Tax Due to Undue Hardship, to request more time to pay. Acting quickly can save you additional expense and stress. Once your tax returns are filed, it's time to tackle any remaining balance. Start by evaluating your financial situation to decide the best way to address tax due. If you can't pay the full amount immediately, you can apply for an installment agreement to make monthly payments over time. Or, if your circumstances warrant, consider seeking tax relief through penalty abatement, currently not collectible status, or an offer in compromise. Penalty abatement may be possible if you qualify for a first-time penalty abatement, or if you can prove financial hardship or other valid reasons for not paying or filing on time, as explained earlier. Currently not collectible status temporarily suspends IRS collection efforts if paying your tax liability would cause undue financial hardship, while an offer in compromise allows you to satisfy the tax liability for less than the full amount owed if you qualify. Consulting with a qualified tax professional is also highly recommended. They can analyze your specific case, negotiate with the IRS on your behalf, and help you explore available resolution options. Failing to file tax returns can have serious consequences that affect your financial stability and tax obligations. From missing out on a potential tax refund to incurring penalties and interest, the longer you delay, the more difficult it becomes to resolve the situation. Let's break down what happens when back taxes go unaddressed. The IRS failure to file penalty is one of the most significant consequences of not filing your taxes on time. This penalty applies to taxpayers who fail to meet their tax filing deadline and meet their filing requirements. The penalty is generally 5% of the unpaid tax for each month or part of a month that the return is late, up to a maximum of 25% of the unpaid tax. If your return is over 60 days late, the minimum penalty is $435 or 100% of the unpaid tax, whichever is less. This penalty increases your overall tax penalties, making it harder to catch up. Interest is also charged on both the unpaid tax and the penalties, increasing the total amount you owe. This combination of tax penalties and accrued interest can lead to a much higher balance than what was originally owed. It's important to file your tax return as soon as possible to minimize the impact. The IRS failure to pay penalty is another consequence taxpayers face if they don't pay their taxes by the due date. This penalty applies if you owe taxes but fail to satisfy the unpaid balance by the due date. The penalty is usually 0.5% of the unpaid balance for each month the tax is unpaid, with a maximum penalty of 25%. The longer the balance remains unpaid, the more the penalty accumulates. On top of the penalty, interest accrues on the unpaid balance, further increasing the amount owed. Interest rates change quarterly, but are generally quite high, and they're charged on both the unpaid tax and the penalty. Taxpayers can avoid or reduce this penalty by either paying their taxes in full as soon as possible or setting up a payment plan with the IRS to pay over time. Plus, if you're facing financial hardship, you may qualify for a reduction or even a waiver of the penalty under certain circumstances. It's important to act quickly and communicate with the IRS to avoid escalating collection actions and payment penalties as part of the collection process. Interest on back taxes begins to accrue when your tax liability is due and remains unpaid. This interest is charged on both the unpaid taxes and any penalties already assessed, using a rate based on the federal short-term interest rate plus 3%. The rate may change each quarter, so the interest rate will fluctuate based on current market conditions. This means that the longer you take to pay your back taxes, the more interest you will owe over time. Since the interest is compounded daily, each day's unpaid interest becomes part of your balance, and the next day's interest is calculated on the new, higher balance. Besides interest, you also owe penalties if you fail to file or pay your taxes on time. This can quickly add up to the total amount owed, especially when combined with the accumulating interest, which depends on a few key factors. First, interest begins to accrue the day after your return is due if the taxes remain unpaid. For most people, this is April 15th for their annual tax return. Even if you file for an extension, interest begins to accrue from the original due date, not the extended deadline. There are also penalties for not filing or paying on time. These are added to your total balance and can quickly become a large part of your liability. Finally, as mentioned above, the longer your back taxes go unpaid, the more interest accrues, causing your balance to grow significantly as time goes on. To resolve interest accrual on back taxes, the first step is to contact the IRS to determine your current balance, including both taxes and interest. Once you have this information, you can take steps to pay the outstanding balance. If you can't pay the full amount right away, setting up a payment plan is a viable option. This will allow you to spread out the payments over time, which will also help prevent further interest from accumulating. Be sure to stay current with the plan to avoid additional federal tax liens or other collection actions. Filing past due returns is essential if you want to avoid the loss of refund. The IRS has strict rules about refund eligibility, and if you don't file back taxes within 3 years of the original due date, you lose the chance to claim any refund you may be entitled to. This means that any overpayment of federal income taxes for those years will not be returned to you. Moreover, if you have a refund for the current tax year but still owe taxes on past due returns, the IRS may retain your refund and apply it to the unpaid balance. This process is known as refund offset and is common in situations where taxpayers have unresolved tax liabilities. To protect your refund eligibility, it's important to act quickly and file back taxes for any missing years. Even if you don't owe taxes for those years, not filing means the IRS can't process your return to issue your refund. Filing all required returns will ensure you receive any overpayment you're owed and prevent further complications. Filing tax returns can be overwhelming, but Community Tax is here to simplify the process. Whether you're dealing with late filing, navigating payment options, or addressing compliance issues, our team of tax professionals is ready to help. We specialize in working with taxpayers to file previous year tax returns, set up payment plans for any tax balance, and resolve communication challenges with the IRS. At Community Tax, we work to ease your stress by handling every aspect of filing back tax returns, ensuring accuracy, and guiding you through IRS requirements. Let us help you regain control of your taxes and create a clear path to compliance and financial peace of mind. Contact a tax expert today and take the first step toward resolving your tax situation. We hope this video has been helpful. Make sure to subscribe to our channel as we continue to delve deeper into important tax-related subjects.